It was English composer George Harrison who said, "If you drive a car, I'll tax the street. If you try to sit, I'll tax your seat. If you get too cold, I'll tax the heat. If you walk, I'll tax your feet, 'cause I'm the tax man." In this lesson, we're going to understand the difference between a tax credit and a tax deduction. We're going to file a Form 1040 with Schedule 1 adjustments to income, and we're going to file a 1040 with a Schedule A itemized deductions. All to answer the question, what is the difference between tax evasion and tax avoidance? Before we get into it, let's make sure we're ready for this lesson by looking at warm-up number 2. Which of the following algebraic expressions represents the result when x is increased by 7.4%? The key here is understanding 7.4% as a decimal would be 0.074. So we're looking for x times 0.074. But remember, we're having x increased by it, which means we're having the value of x plus that times it, which means we're looking at 1.074 times x, which makes both A and B correct since there was a misprint. Now, let's take a look at a problem that you will be able to do by the end of this lesson. The Koski family's adjusted gross income was X dollars. Their total deductions for the year were D dollars. If the tax liability on X minus D dollars was T dollars, and they had C dollars of tax credit, represent their tax liability algebraically. So we understand their tax liability was T dollars, or just simply T. And we understand that they had C dollars of tax credit. So when we subtract C, that's our algebraic expression. The IRS publishes thousands of pages of instructions to describe the tax code of the United States. Most citizens only need Publication 17, Your Federal Income Tax, to fill out their tax returns. There are many rules designed to allow taxpayers to use certain expenses they have to lower their tax liability. If you use one of these rules to your advantage to lower your tax burden, then you're not breaking any laws. This is called tax avoidance. If you lie about or deliberately omit items from your tax return, you are committing tax evasion, which is a crime. You can learn about all tax laws by reading literature available online from the IRS. Deductions are expenses that lower your taxable income, which means when you look up your taxes on tax tables, you pay a lower income tax. There are many deductions that the government allows taxpayers to use to lower the amount they pay in taxes, including medical expenses, property taxes, state and local income taxes, casualty and theft losses, moving expenses, business expenses, student loan interest, mortgage interest, charitable contributions, education expenses, job-seeking expenses, and alimony payments. These deductions are filed using a 1040 and additional forms, schedules, and guided worksheets from the Form 1040 instruction booklet. In this lesson, we will concentrate on Schedule 1, which we first used in the last lesson, Form 1040, reporting taxable income, and Schedule A itemized deductions. When you reported additional income on Schedule 1 in the last lesson, you may have noticed the bottom section, Adjustments to Income, which offer taxpayers certain tax deduction. The information needed for calculating and claiming deductions is found in the Form 1040 instruction booklet. Deductions are subtracted from your income before you look up your taxes on a tax table. Tax credits are another way to reduce your taxes. A tax credit is an amount you subtract from your tax after you look it up on a tax table. Two popular credits are the child care tax credit and the earned income credit. The amount of any credit is dependent on many different factors. In Publication 17, the IRS offers credit worksheets on which taxpayers can determine if they qualify to claim a credit. If they do, the amount is then transferred to their tax return and used to reduce the taxes owed. All tax deductions and tax credits are subject to certain limitations and restrictions, and it is important that you know the rules that apply. These limits and restrictions can change from year to year, so it is a good idea to use Publication 17 each new tax year. Even if you choose to have an accountant do your taxes, you need to know what aspects of your financial life affect your taxes so that you can tell your accountant everything they need to file your tax forms. Here, we're going to learn to lower your Form 1040 tax liability with two attachments to Form 1040, Schedule A and Schedule 1. Ty is filing his Form 1040, and his filing status is single. His adjusted gross income from line 8B is $87,651. Rather than use the standard deduction you learned about in the last lesson, which is $12,200 for a single filer, Ty is using the tax avoidance and legal deductions to lower his taxable income. He uses Schedule 1 and Schedule A to list $21,751 worth of deductions. He also has a child care tax credit of $1,211. What is his tax liability? So we're going to subtract the deductions from the adjusted gross income, meaning $87,651 minus $21,751 to give us $65,900. Notice how tax deductions are subtracted from adjusted gross income before you look up your tax liability from a tax table. The tax on his income found on the tax table is $10,362. Ty also had a tax credit of $1,211. Tax credits are subtracted from the tax after it is found on the tax table. Subtract the tax credit from the tax found after the deductions were taken. So we get to subtract $1,211 from this to find $9,151 is Ty's tax liability. Now let's check our understanding. If Ty did not know about tax deductions and tax credits, he would have just taken the standard deduction. How much did the tax deductions and tax credits used lower his tax liability? Well, he earned $87,651. With the standard deduction of $12,200, he would have been paying taxes as if he earned $75,451. From the tax table, we get that is $12,463. Now, we know from the last problem that he actually was paying $9,151. So if we subtract that, we get a $3,312 savings by knowing about his tax deductions instead of using a standard deduction. Ben and Akira Pasquale are married and have 3 children: Ashanti, Ramon, and Samantha. Ben is a history teacher and Akira is a carpenter. They file as married filing jointly. Ben has a tutoring business, so he also filed Schedule C. He's also paying off his student loan and will deduct the interest. Akira draws a cartoon for a local newspaper and has also filed a Schedule C for her business income. She was unemployed for several weeks during the year. Their W-2 forms are shown here on the screen. Here is additional important information. Taxable interest, Excelsior Savings, $702. King County Bank, $981. Ordinary dividends from Xerox, $320. Ford, $1,803. Refund from last year's state income tax, $907. Taxable business income from Schedule C, $2,010 from Ben's tutoring, $960 from Akira's cartoon. Unemployment compensation, $2,700. Education expenses, $133. Penalty for early withdrawal of interest, $57. Student loan interest, $2,670 for the year. Medical expenses, insurance of $12,176, prescription $600, doctors $5,240, dentist $2,300, eyeglasses $510. For taxes, the state income tax is from the W-2. The real estate tax is $6,213. The home mortgage interest paid is $9,110. Contributions of cash, $987. Used clothing and furniture, $450. Casualty and theft losses. They had flood damage not covered by insurance of $12,034 and had an uninsured camera worth $980 stolen while on vacation. Child care credits of $1,213. They had to pay for daycare when both parents were working. Fill out their Form 1040 up to line 3B on page 2. Use all zeros for their social security numbers, and remember to round to the nearest dollar when entering numbers into Form 1040. We're going to use everything we learned in the last lesson to complete the 1040 up to line 3B. Notice that they had to add to find the total wages, total interest, and total dividends using the numbers stated from example 2. You have already seen this in the last lesson. Note that they should fill out a Schedule B since their interest and dividends are worth more than $1,500. Let's check our understanding. A family won $1,900 in prizes. Is this reported on the Schedule B? And explain. No, it's going to be reported on a Schedule 1 and transferred to Form 1040. Schedule B is only for interest and dividend income. The Pasquale family needs to compute the additional income portion of the Schedule 1 so they can continue their Form 1040. Complete the additional income portion of Schedule 1 for the Pasquale family. Their state income tax refund was entered on line 1, and to find their total taxable business income for line 3, we're going to take $2,010, and we're going to take the $960 to get $2,970. The unemployment compensation and prizes are entered as we learned in the last lesson, and the total on line 9 is computed. Remember that the entry from line 9 of Schedule 1 is also written on line 7A of Form 1040. Add to find the entry for Form 1040 line 7B. This is $111,316 plus $1,683 plus $2,123 plus $8,977 for a total of $124,099. Before looking up $124,099 on a tax table to find their tax liability, the Pasquales are going to the IRS forms, schedules, and worksheets to lower their taxable income. Let's check our understanding. Janelle's income from wages, dividends, and income was X dollars. She had Y worth of additions to income from Schedule 1. What is her total income expressed algebraically for line 7B on Form 1040? Simply, we're going to take her X dollars, add that to her Y dollars. Ben Pasquale teaches a night course at a local college and bought $133 worth of materials for his class. These are called educator expenses. He also had to withdraw money from a CD account at his bank and paid $57 penalty for early withdrawal of interest. These expenses are deductions from income for Schedule 1. What line should Ben use to enter these deductions? Ben needs to read each line in the adjustment to income section of Schedule 1. He finds line 10 and enters his educator expenses. Line 17 is where he enters the penalty on early withdrawal for savings. Let's check our understanding of this. Bruce Townsend has educator expenses of E dollars and paid alimony of A dollars to his ex-wife. Express his Schedule 1 adjustments to income algebraically. Once again, we wind up with something that is rather straightforward. We know that we have E and we have A, and there is our expression. Ben is paying off a student loan and paid $2,670 in student loan interest for the year. What is his student loan deduction, and where can he enter it in Schedule 1? The maximum that can be deducted for student loan interest in 1 year is $2,500. And if you earn more than a certain amount, you can't deduct student loan interest at all. Ben uses a student loan worksheet in Form 1040 instruction booklet. It guides him one step at a time so he can figure out his deductions. Based on the worksheet, his student loan deduction is $2,500. This would have been lowered even more if the Pasquale's income was higher. Ben enters this on line 20 of Schedule 1. He then computes line 22 and the total Schedule 1 adjustment into income. You can see the student loan worksheet and learn more about the student loan deduction in publication 970, Tax Benefits for Education, which you can download for free from www.irs.gov. The amount from line 22 Schedule 1 is entered into line 8A and subtracted from line 7B of Form 1040. The result is entered on line 8B of Form 1040, so we get $124,099 minus $2,690. And this is going to give us $121,409. The adjustments to income section of Schedule 1 has allowed the Pasquales to lower their income before they look it up on the tax table. Let's check our understanding of this. Daryl has 3 adjustments of the amounts R, T, and U dollars in his income of X dollars. Express his adjusted gross income algebraically. So we know that his total dollars earned was X, and we're going to subtract all of these adjustments, meaning the R and the T and the U. Let's remember that adjustments are tax deductions. The Schedule A itemized deduction is a form that allows taxpayers to reduce their taxable income by subtracting certain allowable expenses. The form itself lists these expenses, but there are many questions a taxpayer could have about which expenses qualify for itemization. These questions are answered in the Form 1040 instruction booklet and in Publication 17, Your Federal Income Tax. Be sure to download these and refer to them as you fill out your Schedule A. The Pasquales paid $12,176 for medical insurance last year. They also paid $600 for prescription, $5,240 for doctors, $2,300 for dentists, $510 for eyeglasses. Medical insurance covers 80% of these expenses, so they only had to pay 20% of the medical bills. The IRS allows medical and dental expense deductions for the amount that exceeds 10% of the taxpayer's adjusted gross income. This amount is called a threshold. How much can they claim as a medical deduction? The Pasquales paid $12,176 for medical insurance, but that insurance did not cover 100% of their medical expenses. Look at the medical and dental expenses section of Schedule A. Determine the amount that the Pasquales paid out of pocket for medical bills. Add it to find the total medical bills that insurance would partially reimburse. So we have $600 and we have $5,240 and $2,300 and $510, giving us a total $8,650. Since the medical insurance company reimburses them for 80% of the cost, the family only paid 20%. So if we multiply this by 0.2, we get $1,730. Add the expenses to the cost of their medical insurance, which is $12,176, to get $13,906. These medical expenses are entered into line 1 of Schedule A. For line 2, they calculate 7.5% of the adjusted gross income from line 8B of Form 1040 and round to the nearest dollar. So $121,409 times 0.075 gives us $9,106 when rounded to the nearest dollar. Next, they compare the medical expenses to the 7.5% threshold for medical deductions. Since $13,906 is greater than $9,106, you can see that their medical expenses were greater than 7.5% of their income. They can deduct the amount over 7.5% of their income and subtract to find for line 4. So $13,906 minus $9,106 gives $4,800. The medical deduction, $4,800, is entered into line 4 of Schedule A. If medical expenses are less than 7.5% of adjusted gross income, the medical deduction is 0. Let's check our understanding. Mary's adjusted gross income from line 8B of Form 1040 was X dollars last year. If she had M dollars of medical expenses not covered by insurance and paid I dollars for medical insurance, express her medical expense deduction algebraically. This means we're going to take the M and the I, we're going to subtract 0.075, 7.5% of her income. The Pasquales had state income tax withheld, and they also had $6,213 in real estate taxes. They paid $9,110 in mortgage interest. How are these expenses entered into Schedule A? The state income tax withheld is from box 17 of each of their W-2 forms. Add to find the total income tax withheld, so $2,101 and $1,987 will give us $4,088. This is entered into line 8A of their Schedule A. The real estate tax of $6,213 are entered into line 5B of Schedule A. Add to find the total tax for line 7 of Schedule A. So we take that $4,088 and we add $6,213 to get $10,301. This amount is entered into line 5D. Look at line 5E. Notice that if the taxes you paid exceed $10,000, you can only deduct $10,000, the maximum allowed in this section for Schedule A. Since $10,301 is greater than $10,000, the allowable deduction is $10,000, which is entered into lines 5E and 7. The amount of mortgage interest paid is $9,110, is entered into line 8A, and then again into line 10 of Schedule A. The taxes and mortgage section of Schedule A are shown. Let's check our understanding of this. The Keenan family paid T dollars in state income taxes and R dollars in real estate taxes. What is the amount of their Schedule A taxes paid if T and R are each greater than $6,000? If T and R are both greater than $6,000, then total paid is over $12,000. So $10,000 is paid. Let's remember that the limitation on taxes paid as a deduction of Schedule A can change year to year. The Pasquales gave $987 to different charities. The highest amount they gave to any single charity was $100. They also donated $450 worth of old clothes to different charities. The highest value of items they gave to any single charity was $120. Find the total of their charitable contributions. Monetary donations are entered into line 11, and used clothing and furniture donations entered into line 12. Add the two different types of donations so that we have 987 plus 450 to get 1,437. The total of their charitable contributions is $1,437. This is entered into the gifts and charitable section of Schedule A on two different lines as shown. Let's check our understanding. Pete donated X dollars in cash to charities over the last tax year. He also donated B bags of used clothing valued at C dollars each. Express the total charitable contribution algebraically. Well, B bags of clothing were donated with C value each, so the value is B times C. If we add the dollars that were donated, we get X plus B times C. The Pasquales had $12,034 worth of flood damage that was not covered by insurance, and they had a camera worth $980 stolen while on vacation. Find their casualty deduction. First, the IRS requires that $100 be deducted from each casualty. So $12,034 minus 100 will give us $11,934, and $980 minus the 100 will give us $880. Now we're going to add to find the next step of their casualty loss computation. So when we add these, we get $12,814. Only part of the remaining casualty loss is deductible. To find out how much, subtract 10% of the adjusted gross income of Form 1040 from 12,814. So we have 12,814 minus 10% of their income, 121,400. This is going to give us 12,814 minus 12,140, 90 cents. And this is going to give us $673 when rounded to the nearest dollar. After rounding to the nearest dollar, the casualty deduction is $673. This is entered into line 15 of the casualty and theft losses section of Schedule A. They also must fill out an additional form to explain the financial details of each casualty or theft loss. This is explained in the Form 1040 instructions. Let's check our understanding of this. Scott's adjusted gross income was X dollars. He had 3 different casualties last year that were not covered by insurance. A car was stolen and he did not have comprehensive insurance, so he lost C dollars. A storm caused S dollars damage, and his vintage violin worth V dollars was destroyed in a fire. Express his casualty loss algebraically. Now, we know that the casualties were C and S and V. We also know that we have to deduct $100 for each of these casualties. Being that there's 3, we can subtract $300. And from this, we want to figure out what is 10% of the income, or 0.1 times X. The Pasquales have no other itemized deduction for line 16. You can learn about what deductions qualify for line 16 in publication 17. Find the total of the Pasquales itemized deductions from Schedule A and enter it into line 17. We're going to add the numbers in the right column, which is lines 4, 7, 10, 14, and 15 of Schedule A that we found in the examples 6 through 9. What we have is $4,800 and $10,000 and $9,110 and $1,437 and $673. Adding these all up, we get $26,020. Their total itemized deductions are $26,020. Look at line 17 of the Schedule A form. It's now completed. The amount for line 17 of Schedule A is also entered into line 9 and 11A of the Form 1040. It is important to note that the itemized deductions of $12,020 surpasses the $24,400 standard deduction for a couple filing as a married filing jointly. Keeping track of their Schedule A expenses allowed the Pasquales to lower their taxable income more than if they had just used the standard deduction. Let's check our understanding. The Vault family took 3 hours to gather receipts and information and fill out their Schedule A. Their itemized deductions saved them $1,236 in taxes. What was the mean saving per hour on a Schedule A? Well, if they managed to save $1,236 and they did this in just 3 hours, that means it was as if they were earning $412 an hour just to file their taxes. The Pasquales used Schedule 1, adjustment to income, and Schedule A, itemized deductions, to reduce their taxable income. What is their taxable income tax, and what is the tax on their income? Look at line 11B on Form 1040. Subtract the itemized deductions to find the taxable income. So $121,409 minus $26,020 gives $95,389. This is their taxable income, and it is entered into line 11B of the Form 1040. The taxable income is the amount that is used when they look it up in a tax table. The tax is $12,700. This tax is much lower than the tax on line 7B, income. The Pasquales used adjusted and itemized deductions to substantially lower their taxable income. This is tax avoidance. The Pasquales will also use tax credits to lower their taxes even more. Let's check our understanding. Adam's filing tax status is single. He filled out a Schedule A and found that his total Schedule A itemized deductions were $9,234. Why did he then decide not to use a Schedule A? The standard deduction for single filers, which is $12,200, gives him a larger deduction than his itemized. Because they both work, the Pasquales pay for daycare. After reading the Form 1040 instruction booklet, they found that they could claim $1,213 child care credit. What is their tax after credits are subtracted? So we're going to enter the child care credit of $1,213 on line 13A and 13B. Remember, their tax credits are subtracted from the taxes found on the tax table. From example 12, the taxes were $12,700. We're going to subtract the child care credit of $1,213 to get $11,487. The tax has been reduced to $11,487. On line 14 and 16, enter $11,487 as shown. Let's check our understanding. If Jake's taxable income was T dollars and then he had C dollars of tax credit, where C is greater than T, what is Jake's tax liability? Well, 0, and he lowered his tax all the way to nothing because his credits were higher than his liabilities. Did the Pasquales employers withhold enough in federal taxes to meet their tax liability? Ben's employer withheld $4,003.44 in federal income tax, and Akira's employer withheld $5,262.21 in federal taxes. This was shown in box 2 of their W-2 form. Add to find the total federal income tax withheld for line 16 of the Form 1040. So $4,003.44 and $5,262.21 gives us $9,265.65. The total federal income tax withheld is entered as $9,266 on Form 1040, line 17. They had no entry for line 18, so $9,266 also appears on line 19. Since the Pasquales' total tax is $11,487, their employers did not withhold enough federal income tax, and they owe the government the difference. Subtract line 19 from line 16. So that $9,265.65 is going to be subtracted from $11,487, and this is going to give $2,221. The underpayment of taxes is $2,221 is entered into line 23, the amount you owe. The Pasquales can either include a check payable to the U.S. Treasury with their paper return or have the money electronically withdrawn from their bank account. Let's check our understanding. The Koski's family adjusted gross income was X dollars. Their total deductions for the year were D dollars. If their tax liability on X minus D dollars was T dollars, and they had C dollars of tax credit, represent their tax liability algebraically. Since their tax liability was T dollars, if we subtract their credit of C dollars, we find what is their actual tax liability.